Journal voucher in Giddh. A journal voucher in accounting is a tool used to document specific and unique financial transactions. It's handy for recording events or adjustments in a company's financial records. So, where is it used? Well, it comes into play for entries that don't neatly fit into categories like sales, purchases, payments, or receipts. Journal vouchers are for special cases. In simpler terms, if you're dealing with something other than the usual activities like buying and selling or making payments, for instance, charging depreciation on assets or record outstanding expenses in your accounting books, that's when you turn to a journal voucher. Let's understand this with an example by recording an entry of depreciation. Depreciation in accounting is like fading away of the value of assets a business owns, like equipment or machines. It's a way of showing that these things become a bit less valuable over time. To record entry of depreciation, access the master's option and select fixed asset. By clicking on the Create New option, create a group for your fixed asset, for example, machinery, and save. Click on the machinery group, then click on Create New to establish an account for the specific asset. For example, here we are creating an account of boiler machine. As depreciation is an indirect expense, an account for depreciation should be present in the other indirect expenses category. To create an account of depreciation, under the master option, click on Indirect Expenses group, followed by Other Indirect Expenses subgroup. Under Other Indirect Expenses, create an account of depreciation by clicking on Create New. After creating the account, click on Save. Now, as the accounts are created, let's post an entry in the ledger of depreciation. You can directly go into the ledger by Ctrl+G for Windows and Command+G for Mac and search depreciation. You are now into the ledger of depreciation. As depreciation is an expense, hence it will be recorded on the debit side. Enter the machinery name on which depreciation is being charged with amount, and click on Save. Giddh smartly recognizes the entry and selects the voucher as journal voucher. Entry in the respective account of machinery which is depreciated will automatically be recorded. Another situation where a journal voucher comes into play is recording outstanding salary. Outstanding salary is the amount of money a company owes to its employees for work performed but not yet paid. How to record? First, navigate to the Master's option and click on the Indirect Expenses group. Create an account for salary in Other Indirect Expenses group and save. Now click on the Current Liabilities section. Generate a group for outstanding expenses. Now in that group, create an account of outstanding salary or any outstanding expenses you want to create as it represents a liability to be settled, and click on Save button. Recording entries. After establishing these accounts, you can effortlessly record entries. Search for the ledger of outstanding salary directly by using the universal search button, Ctrl+G for Windows, Command+G for Mac. After going into the ledgers of the outstanding salary, record your entry with amount on the credit side. Giddh recognizes the entry and picks journal voucher by default. By following these steps, you can effectively utilize a journal voucher for your financial accounting. Thanks for watching. Giddh, a book that makes sense.